Hello guys and welcome to Hakman Traders. In this video I'm going to be showing to you how to recognize a bearish trend. So in this case it is the same as I made a previous video about how to recognize a bullish trend. Both of these videos are the same but are opposite but they are opposite to each other. So now let's get started on how to recognize a bearish trend. So what is a bearish? A bearish trend is a trend that moves the market in the downward direction, decreasing the prices and also in which the sellers are more active than the buyers. In this case, as you can see that the sellers and the buyers both were active in all of the parts. Now let's start from the beginning of this level. Let's take this candlestick. This candlestick opened right at this level. The bulls were active, they pushed the market up, but again the bears jumped in and pushed the market down and closed at its lowest. And again on the same day, a strong bearish candlestick, and on the second day, a strong bearish candlestick, and then it continued. The bulls showed some resistance at this level, but it failed, and the bears were active and they pushed the market down. At this level, a major rally occurred, again a rally, and then the market again a rally, and then the market went down. So overall, this is how you should recognize a bearish a bearish trend by using the candlestick psychology. I've made a video about how to recognize how to read the candlestick psychology, how to trade on the basis of candlesticks. So do watch that video. I'll mention that in the video somewhere here or somewhere at this level. And there are certain, like the bullish candlestick in the bearish like the bullish candlesticks. There are also the patterns related to bearish candlesticks as well, which you will have to recognize at different levels. You can learn them so that trading is easy for you, and then it would not be difficult on recognizing where those methods occur. Sometimes these things are also not true, but in this case, as you can see that it was quite true for our downside gave three methods. It means that two bearish candlesticks and one bullish. The market went up, but again it applied, and it was a bearish continuation. So for that reason, you'll have to learn these candlestick patterns on how they show up at different levels. So if you do not learn them, it's totally fine, and they show up at different levels. But some of them you'll have to keep an eye out on these, because some of them are not true, and you might blindly follow them. So like this one, let me show you. This one is true at this level. You can see dodgy star bullish. You can see that a dodgy star. Now what this candlestick shows, that there was a fight between the bulls and the bears. The bulls, at this level the bears were exhausted, but now the bulls won and they gained control of the market. They pushed the market up to some extent, not that much, but again bearish reversal. As you can see that it was bearish, but again it gained control of the market. Dodgy star, look, it again appeared at the same level. Now these are not quite true because these two are not quite true at these levels. They are not evident because we can see that this was not a bearish trend, because it was a type of a swing or a rally, no sorry, a pullback or something. Because as you can see that this was not a bearish trend, is something like this. It continued in the downward direction. So this did not continue in the downward direction. It immediately went up, and then again pushed down, came down, and then again it went up. So these two are not that much evident at this level, because you can see that it shows that bearish reversal and reliability is high. So in this case it was not that high, and again the market went up in the upward direction. So you'll have to keep an eye out on such indicators and such things to make you consistent profits. Now in this case, as you can see that the candlesticks opened at this level, went up at this level, and then the bears jumped in, but they were not so strong. So the bulls won. The bulls won at three different levels. Now at this candlestick you can see that the size of the candlesticks is decreasing day by day, or stick by stick. As you can see that this one was bigger, this was a bit smaller, again a bit smaller, and much smaller than these three here. So in these candlesticks you can know that the bulls are much stronger at this at the first candlesticks, and at the second they got a bit weak, on the third a bit more weak, and on the fourth they were much weaker. So it means that the bears will jump in at any level. So you will have to be prepared for that, and you will have to short your position at that level. So again they push the market down. Now what these two candlesticks shows, now this candlestick shows that this indicates that that the bears are strong at this level. They push the market down, but again at this level the bulls took part in this candlestick, and they pushed the market up, closing slightly above. So now at this level a strong bullish candlestick occurred on the next day, and now on this day there was a fight between the bulls and the bears. Both were fighting to gain control of the market. The bears won, but the bulls again jumped back in and pushed the market up. So these are the things that you'll have to know, you'll have to keep in mind on while trading on the basis of candlestick psychology, on candlestick patterns. So, and that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.